Generally, when you get above 3 standard deviations, good time to take profits. So if you've had some small cap exposure, this is probably a good time. These type of extended moves generally don't last for very long. Let's talk about what you need to know before the bell this morning. Small and mid caps have been the news over the last couple of days in particular, as they've outperformed large cap stocks by a very large degree. And you can see this in this chart right here. Nice buy signal on mid caps. Extremely overbought right now. We are now 3 standard deviations above the 50-day moving average. Again, that is a very, very extended move in a very short period of time. We've seen these moves before previously, and there's a couple of things to really kind of note about this. Generally, when you get above 3 standard deviations, good time to take profits. So if you've had some small cap exposure, this is probably a good time. These type of extended moves generally don't last for very long. In particular, if we take a look back at small and mid caps over the course of the last 3 years, it's a very, very different story. When you take a look at large caps, of course, we've been talking about how large cap stocks, the S&P 500, the NASDAQ, making new record highs virtually every day here recently, really have been making new highs for the last year or so. As it broke out above that January 2020 high, mid caps, small caps have not done that yet. Taking a look at the Russell 2000, yes, we had a very sharp move here, but this is pretty much still within this realm of this trading range that mid caps have been in now for really the last year and a half. Here's your previous high in January of 2021. So again, you haven't really done a whole lot, but we are back on a buy signal, as I said, but we're starting to get to more overbought conditions. So now the question is this the rotation? Is this the time now that small and mid caps are going to take the lead from large cap stocks? That's the hope right now for a lot of investors, and they're going, hey, this is the rotation. But we've seen these moves before, and they fail every single time. There's a couple of reasons to be concerned about this particular move, and I'm not saying that this isn't the moment, right? That this finally breaks out and plays catch up. But there's a couple of problems with the small cap, mid cap space. 40% of these companies are now basically non-profitable. They don't earn money, and they're very dependent on debt. So the problem is going to come up for a lot of these small and mid-cap companies over the course of the next years. They have to refinance that debt. They may or may not be able to do that depending on what's happening with Fed policy, what's happening with interest rates. Is the yield come down enough to really support that? The second problem for small and mid-cap stocks is they are very, very dependent on economic activity. They are more sensitive to changes in economic activity than large cap stocks in general. So again, if the economy is indeed slowing down, you're going to see more of an impairment to earnings in the small and mid cap space in particular. Lastly, to be concerned about is that small and mid cap stocks do not have the capacity to do very large share buyback programs like large caps do. So that support that you have seen inside of the large cap stocks that have kept stocks higher is not available because they can't do the buybacks. And more importantly, they don't benefit as much from the passive flows of ETF investing. So again, what we've seen is 35 cents of every dollar goes into those large mega cap stocks. That's not the case with small and mid cap. So look, nice rally here, take advantage of it. But again, let the market tell us what this is going to eventually turn into rather than banking on it for right now. Lots of problems in that space. Okay, that's what you need to know before the bell this morning.